Hi, this is Charting Man Dan of TheChartGuys.com, home of technical analysis education. Click the link for a free week trial, no credit card required, and gain access to our multiple live broadcasts daily, community chat room, educational videos, nightly watch lists, and more. Invest in your education and future and join the community today. Hey everyone, looking at TWTR Daily, weekly, 5-minute time frame, and after the huge dump, the bulls bounced off 1960. Today we bounced off 1964, so a higher low, a very clear level of support. The 50-day moving average is going to be right there on Monday. If we lose those levels, as soon as we break 1960, that's a bear signal, and our target's going to be down at 1892 to fill the rest of the gap. If the bulls see a bullish day and we head over 2053, the high of today, then we'll be looking for some continuation on that bounce, but in my opinion, that's unlikely at this point. I do think the bears are still in control. Let's look at the weekly. Big bearish candlestick engulfing the previous candlestick, still holding the 10-week support of 1974. If we lose that level, 19 even is the 50-week moving average, and the middle Bollinger Band will be catching up shortly. The 5-minute moving, or the 5-minute chart here, shows a interesting action today. Let's get rid of these pre-market and extended hours, but what started as a very strong bull run, as soon as this was going on, I was on live webcam saying look for a bearish entry position because this was very overdone very quickly. RSI got overbought, and it was very clearly short covering, and it was a bit of a panic short covering in the sense that a lot of stops were getting triggered, and people were racing to the exit, no news related in the first 10 minutes of trading, and then very quickly we just dropped from 2053 and 20 minutes later, less than 20 minutes later, we're down at 2004. So a 2.5% drop. And then by the end, we're dropping down 4 or 5% to the low of the day. And it was a very clear bearish pattern, ramp up in bear volume, and the very short-lived bullish action. And once we saw this big bullish reversal candlestick maintaining 5-minute moving average support, you might say, okay, maybe the bulls are going to make another move here back into the 220s, 230s. And then you look at the volume that follows, and it just putters out. Very weak volume and topping out in a rounded fashion before heading back down on increased bear volume. And then weakness here at the end of the day, just trading straight across. So that is why I believe that the bears still have a stronghold here. And looking at this 20-period moving average on the hourly, we were playing back and forth with it all day today, and we ended the day with it as resistance, as that level is at 1988. So keep an eye on that 20-period hourly. If it drives the price to the downside on Monday, a break of 1960, and we're looking to another leg to the downside, and that's going to be a bearish entry signal. And keep an eye out for potential short covering. You better believe there's tons of shorts on it, and that's what we saw first thing this morning, in my opinion. So it is possible, if you are playing bearish, you need to have those stop losses in because you can see how quickly the bulls can show up and run it to the opposite side, and we obviously know how subject it is to rumors. So thanks for watching. Thanks for all the likes and the shares. Have a great weekend, and I'll see you soon.